The IMF projects that China's economy will now grow at a faster rate than previously expected, up nearly a half percentage point to 5% in 2024, according to the International Monetary Fund's World Economic Outlook update for July.
This revision was in part based on stronger consumption numbers in the first quarter of the year, stronger exports also.
The IMF credits in part Chinese government programs to upgrade commercial equipment and provide opportunities for consumers to trade in used goods like household appliances. Meanwhile, the U.S. economy is now expected to grow at 2.6% in 2024, down from earlier projections of 2.7%. Inflation in the U.S. remains higher than expected, presenting a risk to the so-called soft landing scenario.
Especially the United States, progress on disinflation has slowed. This could force central banks, including the Federal Reserve, to keep borrowing costs higher for even longer. That would put overall growth at risk.
The U.S. economy has helped drive global growth coming out of the COVID-19 pandemic. A slowing U.S. economy could create a drag on global growth, according to the fund. The IMF's overall global growth projection remains unchanged at 3.2%, but the fund warns that unilateral tariffs and other trade restrictions put global growth at risk.
When a country imposes trade restrictive measures, there are retaliation from other trading partners that are imposed in fairly short order, and that reduces or impacts trade, bilateral trade mostly at this point, and that can impact also the diffusion of knowledge, capital flows, and increase uncertainty in the global economy and leaves countries more vulnerable.
Instead, the IMF calls for, quote, constructive multilateral cooperation. Jim Spellman, CGTN, Washington.